Hello, this is Si Wing Yi, and today I'm going to talk about the housing updated forecast, April 2023. Before I begin, please do not forget to like and subscribe to my YouTube channel, and also submit your email into our website database so you can receive free real estate investing newsletters come to your inbox every single. Thank you for attending, and I got a lot of great things to share. So without further ado, I'm going to share, first of all, the Mortgage News Daily update as of today. April 13th, the Mortgage News Daily shows a 30-year fixed rate mortgage. People who have good credit is 6.42%. If we look at the past week from April 5th to April the 12th, we have seen the various volatility of the mortgage interest rate from 6.16, 6.18, and back and forth to 6.42 year over year, April 2023 from April 22. A year ago, the mortgage rate was 5.12%. And so within a year's time, the mortgage interest rate has increased 1.30%. This is the new normal. So let me share with you the terms of the volatility of the mortgage rate, especially these past 9 months, ever since the summer of 2022. As you can see, the summer of 22, we've seen skyrocketing mortgage interest rate from the low 5.5% back in last June 2022. We've seen skyrocketing interest rate throughout the summer, all the way up to 7.3%, and that caused the demand of homes to slow down drastically. Hence, the correction that has occurred with the downward trend of home prices through the latter part of 2022. And then we have seen some hopeful signs as we began the first quarter of 2023. And when we saw a mortgage rate as low as 5.99% back in February the 2nd of 2023 this year, then that brief hopeful signs of first time of mortgage rate cut came down to under 6%. So we see a lot of people got excited, be it very momentarily. Then after February the 2nd, we have seen steady, the mortgage rate go back up again, steady, all the way up to 7.1% as recent as March the 2nd, about 45 days ago. So people, are very emotionally distracted, to say the least, about the volatility of the mortgage interest rate. Anyway, so since March, that we have seen some steady decline of the mortgage interest rate. And during this past 45 days, we have seen uptick in mortgage applications and homes being sold, but still the very low inventory has caused this market to be a very empty market, to say the least. 6.42% right now. With that in mind, let's go back to the main crux of my presentation, which is the current state of the housing market. Is an overview for middle of April 2023. So without further ado, on this graph by Realtor.com, new listings at record low for March. I can't even say it. The new listings, this is a very disturbing trend. The new listings were down 20% year over year for March of 2023 from March of 2022. And these new listings are record low for March. As a result, the new listings remain at 30% below pre-pandemic 2017 to 2019 level. As you can see, this is 2023, this line right here. As you can see, the new listings are down by 20%. If you compare to 2022 and 2021, the new listings were even higher. We have a very robust market a year over year for the past 2 years. But then if you compare to 2019 to 2020, 2017, there were a lot more listings than it is now. So this very low new listings indicates that the current home sellers are not willing to let go of the historical low mortgage rate. Home sellers right now will have a lock-in effect because most of them all have already refinanced back in 2020 to 2021. So they're not going to get rid of their low mortgage rate just to upgrade a home, to buy a new home at 6.5% mortgage rate, therefore doubling their potential monthly mortgage payment. So the incentive and the motivation are simply not there. That's the main reason why we have such a historic low in inventory levels. The impact on active inventory, according to the Alto's research, they have done the analysis from 2015 to now, which is for the past almost 8 years. I will share with you the red line on this graph. The red line is for this year, 2023, and the black line, I'm going to compare that to a better apple to apple comparison. 2019, the black line, we see active inventory for that year. So that said, you can see right here, the red line this year, the active existing inventory is extremely low at 50% below the pre-pandemic level. So this is a very troubling trend. Now, the two lines below the red line were 2022 last year and 2021 prior year during the recent boom. And at that time, we have even lower inventory level. But again, the best comparison, the 2021 and 2020 are really an anomaly. This is not really apple to apple comparison. However, compared to this pre-pandemic level, whereby the listings are way higher, 50% higher than it is right now. So this is a very disturbing trend, as I said. For new homes, there are 5. Now, we agree, we concur that the existing homeowners they are staying in what I call on my earlier video, which I did a week ago. They are glad to be in a mortgage debtor's prison. The current homeowners, because many of them have mortgages, 30-year fixed rate mortgages way below 4%. So the only way to increase the supply of inventory is for the new builders to offset that with new constructions, with new homes. So therefore, according to this chart, the new homes are 5 months of homes under construction. They try to catch up, which is the blue line right here, the 5 months of homes under construction, which is above the normal level, which is good. How far they can catch up to resupply the amount of housing supply inventory remains to be seen as we move forward. Furthermore, there are 1.35 months of completed homes for sale, which is the red dot right here. So this 1.35 months of completed homes for sale, as long as they are the builders nationwide, they're ready to release new construction homes to the marketplace. That may help improve the supply of inventory. The nationwide supply of inventory is around 2.5%. It's getting lower and lower. So 2.5% is still very much a seller's market. And whereby a healthy, balanced supply demand inventory is around 5 to 6 months, and we are at below 3 months supply nationwide. The trend is getting lower and lower because the reasons I've just stated to you. Furthermore, it is likely that we will see a sharp increase in completed inventory over the next several months. There's a decent sign. And we have seen a few months back, we have seen a lot of cancellations by prospective homeowners on the new construction homes. Now the cancellation rate has been falling with respect to new home builders, right? So that's good. Less cancellation because people who want homes, they don't want to cancel. They want to stick to it on purchasing new homes. Over here, the red is a single family units. The red line is the single family construction units. The multi-units are the blue line. We have seen currently there are 734,000 single family units under construction and 34,000. There's a decent sign. However, the single family units under construction have peaked since single family starts are now declining. Construction in new homes due to supply chain disruptions, labor shortages, and other things that we have seen and heard for the past few years. However, multi-family units has been increasing. So in many markets there's a glut of multi-family apartment units that are under construction. That's a decent sign. Highest level since 1973. As I said earlier, the 30-year mortgage rate have been bouncing between 6 and 7%. All I can say is, guys out there, this is a new normal. The mortgage rate, I believe, I don't have a crystal ball, for the next 4 to 24 months, you could make the argument that the mortgage rate will remain at an elevated level at 6 to 7%, give or take. Yeah, on the one hand, the demand is not that great because of home affordability has been an all-time high the past 40 years. But since the inventory is so low, we still have more than enough supply of qualified home buyers to absorb the existing historical low supply of inventory levels. As a result, in many markets, the medium homes or homes in many markets throughout the US right now that are below the median price in their particular market, we are seeing a little bit of a multiple offers and bidding wars, especially with those lower price entry-level homes are priced correctly and they are turnkey, they are in decent location, and the house has been rehabbed properly. Those are the homes that are getting a little bit of a multiple offer, 3 to 5 offers per house, and oftentimes they get overbid by 5 to 10% from this price. So that's what we have seen, because right now we are in a peak of the seasonality, very strong spring buying housing market every year. April and May is very strong. So therefore we're seeing, having said that, we're seeing still very low inventory to able to absorb the pent-up demand for the spring buying season. And this trend is very disturbing as well. So that's what's happening. So for the pent-up demand, those buyers that are affordable, that have a lot of motivation to buy right now, given the limited inventory, they really come to think about it, they don't really care about the mortgage rate between 6 and 7%. They know they can qualify. They know they need to buy a home. They like the location that they want to invest for the long term, 7 to 10 years, ride up the real estate storm, if you will. And so that's what's happening. A year ago, the payment on $500,000 house with a 20% down payment with little less than 5% mortgage rate a year ago, which is April 2022, they would have a payment, principal and interest only, of $21.42 monthly. So the monthly payment for the same house, with the housing prices up 2% year over year from 2022 to 2023 April, and the mortgage rate right now is 6.42%, the new mortgage and interest monthly would be $25.82 from $21.42, with increase of a little bit more than $400, right? Am I right? My math? So therefore, it increased of 20%, as stated at the beginning of this article. So additional $400 increase on a $500,000 house on 20% down payment from a mortgage rate of around 5% to 6.42%. We're talking a mere 1.50 percentage increase of mortgage rate will cause the mortgage payment to be higher to the tune of 20%. So it is what it is. So that as a result of this number situation, we have less buyers that can afford to buy a home than a year ago, to the tune of 20%. So if we compared to 2 years ago, there's a huge difference in monthly payments. Okay, which is April 2021, which is a historical, mind-boggling real estate boom, crazy year, which we'll never see again. 2021, using the same example of a $500,000 house with 20% down payment at that time of a historical low mortgage, about 3%. For those people that purchased 2 years ago with a 3% mortgage, their monthly payment is a little bit less than $1,700. The monthly payment for the same house with home prices up 23% over the past 2 years, and today's current mortgage rate is 6.42%, the mortgage interest monthly payment would be $3,084, which is an increase of 81%. I know hindsight is 2020. For those people that have the wherewithal 2 years ago, 2021, to take advantage of mortgage rate, you guys are sitting pretty. You took action. You were able to consummate a transaction. You guys did not procrastinate. You were fearless. Congratulations to folks out there. For the people that, for whatever reason, 2 years ago, assuming you qualified to get a home at that time, be it with a lot of multiple offers, I get it. You did not take action. You did not execute on your plan. I would eventually guess that you guys or saying to yourself, should have, would have, could have. So that's how it is, right? I hate to say this, but there are winners and losers in the past 2 years. Or I have to say the winners are people that, for whatever reason, they have the motivation and the commitment, or something they could afford it, or they could afford the house and all that. They took action. That's the key. That's the key to financial independence. Taking action what is right for you instead of doing analysis by paralysis, whatever, and stay in the sidelines. You stay in the sidelines, your wealth are not going to be your friend. The increase in mortgage rates is probably the key reasoning why new listings have declined. Like I stated earlier, most homeowners have a lock-in effect. They're not going to get rid of the low historical rate mortgage to move up to double their payments to pay today's mortgage rate. So a lot of people that refinance their homes back in 2020, 2021, and early 2022. So the past 2.5 years on real estate historic boom has benefited for those people that have the wherewithal to take action to better their financial position. So that's the way it is, right? There's a difference between the have and the have-nots taking action. This is very different from a housing bust. We're not going to see a crash for sure because of the low supply inventory, absent any major catastrophes going on in the world. For this reason, low inventory and dependent demand is stabilizing the housing market moving forward. In terms of housing prices, as we are almost concluding this presentation, all the sky is falling scenarios that has been reported by many clickbait, fear porn videos. The demise of the housing market has been greatly exaggerated. In my opinion, we have seen reported year-over-year housing prices growth is still positive, believe it or not, at least according to Case-Shiller National Index. So the month-over-month decrease in a seasonally adjusted Case-Shiller National Index was at minus 0.25%, which is nothing to speak of. This was the 7th consecutive month-over-month decrease and a slightly smaller decrease than December. Other measures of housing prices indicated further declines in February. The National Association of Realtors reported median price were down 0.2%, not even 1%, year-over-year in February, year-over-year. Black Knight reported prices were up 1.9% year-over-year, and Freddie Mac reported housing prices were up 1.1% year-over-year in January. So, again, we go through some little bit of correction. We have not seen any crash. Yes, some markets, like in the western region of the U.S., have seen pretty drastic decline in home prices in the past 8 months. Yes, I get that. But other part of the country, the eastern seaboard side and south and southeast, have seen pretty healthy growth year-over-year in home prices. This is hyper-local. I know the best way I report my videos are high-level national real estate market, but we all need to know that there's no such thing as national real estate market. Real estate market is very hyper-local. We have seen declines in sales. We have seen declines in both new and existing home sales due to higher mortgage rates. The NAR reported sales at a quote seasonally adjusted annual rate of 4.58 million in February. Year-over-year sales have fell 22.6%, down from 5.92 million in February 2022. Again, with validating that sales have been declining, pending sales have been declining, new listings have been declining, everything has been declining, inventory level has been declining. So this trend is really to me, is very obvious. We can have a home shortage. It's very hard to push up the supply of inventory. It's much easier to change the demand component of the housing market. It's much harder to push the supply side. Demand side can go up and down based on mortgage rates, but the supply side, it is what it is. You can't push it up that quickly in terms of inventory unless the mortgage rate fall dramatically. Then it may entice some of those homeowners that have 4% mortgage rate or 3.5% mortgage rate. They may sell their home to move up to a home if the mortgage rate were maybe 5.5%. In conclusion, we have seen a significant year-over-year decline in new and existing home sales, although it is likely that the activity has bottomed but not prices. Prices may not be totally bottom yet. Some markets home prices are still declining. I get that. But many markets are home prices are stabilizing or even increasing depending on what region of the US are we talking about. Home prices are under pressure due to high mortgage rates, but prices are being supported by low level of inventory. What's my takeaway? My takeaway is since this past 9 months, buyers and sellers, they begin to accept the new normal. Anywhere from 6 to 7%, that's all they can expect. Either you can afford to buy a home or not able to afford to buy a home. So those that are afford to buy a home, they are tired of waiting on the sideline. They're willing to pull the trigger. They want to buy a house for their family and live there for the next 7 to 10 years, keep their house long term. However, the home they want to buy are very limited in supply, so they have to compete against other buyers. That's what we're seeing for the next few months, unless things change. If the mortgage rate will decrease below 6%, the sooner the mortgage rate, if and when they decrease below 6%, that's a new psychological trigger to create more pent-up demand. And hopefully, some of the homeowners that are sitting pretty on their fixed rate historical low mortgage, some of them may be willing to give up their low mortgage rate because they have motivation to move up to a new vacation home, buy more cash in a retirement market, whatever. Those situations. Until that happens, this historical low inventory of around 2.5% supply inventory nationwide, in some markets or supply inventory even lower than that, the homeowners are controlling the market. They are dictating the market. That's what's happening. So we're on a peak spring buying season in April or May. The information I share with you is lagging indicator. The next 45 days to 2 months, when more data come before you, as I report updated video for you, we will see what's happening. The crucial months of house season is April and May, especially April. Right now, as we speak, April 13th, today and this week, we should receive a lot of housing activity. If there are lack of housing activity this April, it tells me that the supply of inventory is so low that people are still doing the bidding. Multiple offers are still happening. Nothing crazy like back in 2021, but still. Therefore, the home prices are expected to rise. The data has shown that home price has been rising the past few months due to extremely historical low supply and pent up demand from the buyers who are still willing to buy even with 6 to 7% mortgage rate. Does it make sense? If we see a lot of value from this video, please smash the like button. And also subscribe to my YouTube channel and tell your friends about my channel. We try to provide great education, great content. And furthermore, the website and drop your email into our form below you to subscribe to my weekly turnkey real estate investment letter. Once you join our network, you'll receive weekly free housing market update, investment homes, turnkey investment homes that we promote out of state, regardless of where you live. You have the ability to buy on state turnkey cash flow properties in no cost, affordable, entry level Sunbelt markets, mainly in the Midwest and South and Southeast. Thank you so much. This is Siwen Yi. I will see you shortly on the next video. Have a nice day. Bye bye.